So this is the first webinar of BYOT, Bring Your Own Trade. Bring Your Own Trade, the idea, as most of you have called on, is to post your trades. So I'm really looking for, kind of like I post in the Swing channel, I'm looking for ideas forward, try to get people to think forward of ideas, but looking backwards is not bad at all, because we can analyze those trades, good trades or bad trades. Either one really can be dissected and kind of gone through for the better of everybody to learn and understand how to trade certain things. So first of all, we have Dave's trade on Boeing. So Dave said what he did here is he went back on the previous 5 days looking at support and resistance. So what I've got here on my chart is I've got, let me go over just to see exactly what he pulled up on his. Okay. So he looked at the previous 5 days. So let's zoom out a little bit. This was Wednesday whenever he made the trade. And he took a short opportunity on it. And so, yeah, you can see resistance there at 377. So that's a pretty good sign. You can see some resistance there.
New tweet of Zero Hedge, China bond markets shrug off soaring hyperpigflation, for now.
Probably need to turn that off. All right. Okay, so looking at the previous 5 days. So we went over the class on support and resistance already, talking about support and resistance, finding support and resistance, and I like to go pretty far back. He went back 5 days, which is good enough for most intraday trades. So 1, 2, 3, 4, 5. So we can see here now what I've got on my chart right now is the pivot points. And a lot of stocks, a lot of big stocks especially, really follow pivot points. And you can see the range here on Boeing really does follow it. Now, just quickly for a guide on pivot points, typically if a stock opens above a pivot point, it's considered bullish. And the anticipated move is the first S1 line, resistance line, R1 line. And on Boeing this day, you can see it reached up just underneath it and then fell back down. It's still bullish, it still closed pretty good there, but you see that as support and resistance. That was the range, and pivot points pretty accurately depicted that. Then the next day, it actually opened, not sure if it exactly opened below it, but it opened below it, and then we had a pattern here that we draw a trend line for, and you can see that as a short opportunity, along with it being below the pivot point there. That would have been a great short opportunity there. But you can see that these are support and resistance in this area where we've got all this consolidation, and we got similar consolidation here. So there's a lot of buying and selling going on in this area. So this area right here is, when we draw our line across there, you can see that I've got lots of action around that 374 number. I've got it here, here, all over here, there, multiple touch points on that 374 number. Okay, so we can use that. We'll extend that to the right. And then you can see as well, right about here, we've got a pivot point from a prior day, an R1 line from a prior day, right around 376. So if I draw that line around 376 area, I'm drawing this a little bit differently than maybe I would have. You can see here, it broke 376, held at 374, topped out at 376 there again. 376 was touched here. It was touched here, here, here. Okay, so that's a pretty good line there as well. We go even higher. See some minor resistance there. Just, I would actually say around 376.80. based on those days. So we can see that, and then down below, 372 looks like a pretty decent level. Okay, you can see, and the reason I'm looking at that is you got consolidation in multiple touch points. So that is definitely a support resistance line. So this is just very simple. You see it, very simple for us to find these ranges on those days. Even better whenever it coincides with pivot points. And pivot points are partially determined by volume. So that is a good indicator. And as we go across the screen here, 372 again, you can see lots of consolidation around 372. So that is, and again, you can see the day with the pivot points. Like this day, it opened, looks like it opened above it, even though it broke it. Once it reclaimed that pivot point, it was bullish. And so we're looking at targets there, open above it. Okay, that was very clean. That would have been a very clean trade there if you're just playing pivot points as support and resistance. And open below it here. So we're looking for the S1 line as your target. So that's exactly what it did. It bounced off the S1 line and closed right about it as well. And then it opened. Now this is the day that Dave said he played Boeing right here. So we've got a few different things going on. First, it opened below the daily pivot point. It went and broke it actually, so it reclaimed it and had a really big up move. And typically, any kind of stock where you see a huge, especially like this, where it looks like it consolidated a little bit, it got some buying action. We got the volume really kind of later in the day once it reclaimed that pivot point, got the volume up to 377, and then it came back down. So here's our support resistance line. So we have multiple areas, and he says that he shorted it. Let's pull back up where he says he shorted. Yep, he had the same basic lines there around 376. So he supported it on the break. He went short on the break there. And then if we look at it, so this right here, when you see something break a line, you don't want to just, it depends on the move a lot of times. And if you're watching it correctly though, if it breaks a support line, it's usually going to test that support line again. And your entry is not necessarily when it breaks, because as you can see, if you're playing it up here, it breaks. But that's obviously not an entry because it tested it and it broke it again, okay? It breaks, that's not your entry. It tested it. Now, that may have fooled some people for an entry, but see, it really didn't. It's not really breaking it and dying there. So it came back over. But when you get a support line that gets tested multiple times like this, so you see this action, up, down, like that, it's doing what it's supposed to do. It's testing that support line. So here we see it again, where it breaks it, test it, it comes back over it, breaks it, test it, and then gets stopped, okay? And then it comes back down, pretty clearly is coming back down. So that is a pretty good entry whenever it's falling back from that line. And anytime you've got a big move up, you can probably, you can play it to the short side. You have to be careful because obviously there's a lot of momentum that went into this, bringing it up, but it looks like he actually got a pretty nice play where it actually came back down almost as much as it originally went up. So that was a pretty decent move. He said he also looked at the hourly. So let's go to the hourly and look at that day. Okay, and so the other thing that you can look at on the hourly is the fact that it broke the Bollinger Band here. That's a pretty big move, breaking the Bollinger Band. And anytime that it breaks the Bollinger Band, it's got to come back into the band. So that's another way to look at an entry. Now, you usually don't want to fight the trend, so that's the other danger there. So you have to be careful whenever it not only broke that, but it came back down and broke this 376 line. It really just continued on down. That was a decent play because of the action. Be a little careful with it though. And then if we go back one more time and look at it on the 15-minute chart. So when you're playing with time frames, I really like the 15-minute chart for a lot of reasons. When we talk about the golden and dead cross, the hourly golden and dead cross are the biggest indicators of big moves. But you can also play that on shorter time frames sometimes, and it depends on the stock. It depends on what other price action is going on. So if you see, let's say, a dead cross like this on the 15-minute, but you see a golden cross on the hourly, don't let the dead cross on the 15-minute, the shorter time frame, override what you see happening on the longer time frame. Okay, because if you get out, if you go short based on the 15-minute chart, the hourly chart is going to win. So you want to look at, now if there's nothing on the hourly chart conflicting, then go with it. The other thing that you notice on the 15-minute chart here is the money flow. The money flow is super high, and of course you get a big buy up like this, you're going to have some action that causes the money flow to go real high. Okay, and so that's a good indication that it's going to have to come back down. You've also got this dead cross here, though. So he was saying this is the other thing that kind of influenced it. So there's two things on the 15-minute chart that three things really on the 15-minute chart that you can look at. And some people trade purely and strictly by the 15-minute chart. So if I was watching this as it was coming in, you got lots of consolidation here. Okay, this candle here breaks not only the consolidation, but the pivot point and a resistance line. So, and with that being such a big, solid green candle, there's going to be a follow-up candle and on the 15-minute chart for sure. This is a nice hammer, but this is the one that actually broke the trend. So from here up, you can play it until it finally kind of settles down. And so you'd get out over here. But then it goes sideways. See how this candle, and this candle on the 15-minute chart are solidly over the 376 line, the support line that we had there. So those candles just mean, hey, it's broke the Bollinger Bands and it's coming back inside of the Bollinger Bands. Could be for a move back up. But what happened on the 15-minute chart is actually moved down. So it broke this 376 line. Now, just like on the 1-minute chart, you slow things down. Just because it breaks that line doesn't mean it's just going to go down. That's not how stocks work. This was a pretty clean play because it was up and down. That's super easy. But you would want to wait not only for the break but for the confirmation. So when it comes up and it tests it and then gets rejected, we saw that on the 1-minute chart, but this is how you see it on the 15-minute. It gets rejected. And not only does it get rejected and starts coming back down, you have a dead cross. The 5MA, yellow on my chart, the 5MA starts curling down at the same time, and so that gives you a little bit of an entry. Normally what I would look at outside of just the candles over the resistance, the Bollinger Band coming back on the inside, I would target that towards the 20MA on the 15-minute chart. And you can see that this candle here, it met the 20MA and bounced. It acted as support. But it did not close over this resistance line of 374. So you could have held on there. It also didn't break over the 5MA, and you can see how cleanly these candles just stay completely under the 5MA. So a lot of times, as long as it keeps doing that, you're probably safe. When this 15-minute candle could not break 374, and the next one couldn't break it either, that's a sign to keep. You're going to be inside of this channel here to hold on. And this 15-minute candle broke our next line, 372, kind of an indication to hold on, but this candle would have tricked you out. It's a hammer candle, so you know, okay, get out. So that's a pretty decent play there on Boeing. Pretty decent there to dissect. So thank you for that, Dave. All right, let's see what else we had next on the block here. I was going to do DG since he's in the chat here, so let's see. DG, you had CSX, I believe. Let's get down to it. Yep, CSX. So we'll go to CSX. All right. And you traded this yesterday, I believe? All right, so you said has CSX on my watch list to climb over the correction. So CSX had earnings, and after earnings it went up, but then it came back down the next day. So, and this happens a lot around binary events. People take their profit at the top, and so it sold off for the next, really just that day and then overnight, and then went sideways the next day. Then it started bouncing back up. So this is the day I believe that you say you played it right here. Let's look at. All right. So CSX entered at 9:40. You were looking at the 5-minute chart. So let's look at 5 chart with you. I like using multiple time frames. Use whatever you're comfortable with. Some people are comfortable with trading, like I said earlier, purely on the 15-minute chart. Some people trade purely on the hourly chart. Kind of depends on what you're trading. I think the hourly, I make decisions based on the hourly chart, but I'm not trading purely based on it because we have theta to think about. So I can't hold on to something for 2 hours waiting on 2 candles when theta is in play. And if you're playing longer term, that's fine. So, but a lot of times we like to speed that up, play the 1 minute a lot. 5 minute is great because a lot of times, especially if you're not used to the price action of a certain stock, 1 minute sometimes is too quick. And you have to think too, we've got algos, computer algorithms in the background trading against us. So you have to sometimes ignore some 1 minute candle just because something happened. It doesn't necessarily mean a huge change in direction based on one 1 minute candle. 5 minute chart slows that down just enough to where you can see some things that you can't see on the 1 minute chart. That's pretty good there. So entered 940 on the first pullback on the 5 minute chart. So what you had there is you had 2 strong 5 minute candles, and then you had a little bit of a pullback. And on the 5 minute chart, we broke the Bollinger Band there a little bit, and then pulled back. And you'll notice with CSX, we got the same kind of thing here. It really likes the pivot points. So we actually, for that day, opened above the pivot point line here at 68.56 area. So that's bullish, opening above the pivot point. First candle, 5 minute. It went above, but I mean, you get that with momentum at the open a lot. So it went above, stopped below. The next candle, open and went above that R1 line. Then you got a little bit of pullback there coming across, basically putting it back inside of the Bollinger Band there on the 5 minute chart, and went sideways a little bit. So I would say that's probably that candle there if I was looking based on the 5 minute chart, that candle there scares me a little bit. So I'd wait to see a little bit of sideways action, which it did, to make sure that it's actually just going to come back inside. The only reason I'd usually wait, the biggest reason I usually wait, is because you don't know if this candle is going to end up bringing it back down here before it goes up. Not that it's not going to go up, but you might get a much better entry if you wait just a minute. But that candle stopped there. This candle kind of scares me a little bit too. This candle looks much better. This candle looks way better. And now we're at the 5 MA for some support there too, and then it blasts back up. So that's a really good little play there. And you say that you got out when the money flow. So you're watching money flow in the 5 minute. And I'll say this too, DG, I don't know how often you watch CSX, but every stock really reacts differently to the indicators on different time frames, 5 and 15. Okay, so yeah, they all react differently. Like for instance, I don't really, most of the time, go by the money flow on SPY on the 1 minute. Sometimes it's accurate, but sometimes it's totally not. It mostly has to do with the fact that you've got a lot of people buying and selling SPY that are buying 100,000, 200,000 lots that sort of fog up that money flow. And so the money flow may go really high just because you had a bunch of people buy, because there's so much volume in SPY, It doesn't move the underlying. It doesn't actually move the price, but it'll screw up your money flow and some of your volume. So that's another reason that I watch ES, because ES futures will smooth that out, and I do watch the money flow on the 1 minute on ES. Different stocks though, in CSX is a little bit slower moving stock. 2% move on the day for CSX is pretty big. So if the 5 minute, and that's where you have to watch, get comfortable with the stock before you just jump in and play it, thinking that you know exactly what you're doing. The money flow here indicated that money flow is getting high. It went from really low, and that's another really good thing to watch there, DG. Even though it opened and got balled up and went up really high, the money flow really didn't go up as much as you would expect. And on these candles, the money flow came down. I'll zoom in a little bit on this so we kind of see it a little better. Don't do that to me. I don't know why it does that sometimes. I don't want to draw like that. All right, come on now. There we go. So the money flow what it did here is it went down even though price was going sideways. And that's a great indication that these red candles don't mean it's coming down, the price is coming down. It means price is it's just selling off a little bit, getting ready for another move up. So that's a heck of a move there. And then you got out whenever the money flow kind of peaked up there around 80. So that was right here, and that was pretty much the top. Amazing how the money flow gives you a pretty clear picture of what's going on. You went from money flow bottom to money flow top. You pretty much caught the entire move there. And that's fantastic. And that was which for CSX, again, that's a 1% move right there. That's a pretty decent move on CSX. So that's a pretty good play there. Yeah, and you've got your support and resistance lines there as well, I see. So it was over some key support and resistance lines. And let's look at the 15 minute on that. Get a picture of the 15 minute. Okay, so on the 15 minute, we had a beautiful green candle. That is going to mean when you've got a beautiful green candle like this, and on the 15 minute, even the money flow was low. So, you know, that's a beautiful indication. With a big bodied candle, there's going to be continuation. The wick on the top doesn't scare me in this case because of the Bollinger Band. It's got pretty much the nature of the reason you watch the Bollinger Bands is you know that this is a resistance area. And so it poked through it, and it's not a bad thing that it came back to stay inside of it. It's not a bad thing at all. This candle right here is a continuation candle in this case. Sometimes that will be considered, a lot of times actually, that will be considered a reversal candle. But what you've got to take into account is the fact of where we are with the stock. We had a big open momentum going into the morning. If this candle showed up over here at 2 o'clock or something like that, it would be a little bit different. And that's where, again, too, not every stock reacts the same way. So you got to see if those candles, reversal candles, continuation candles, are meaningful as you watch the stock. Sometimes these reversal candles don't mean the same thing on every stock. You have to watch. The price action on each stock is most of the time the same, but sometimes each stock has its own characteristics. So because that closed pretty decent inside of the Bollinger Band, but still up at the top, you had a nice another green candle there and a nice another green candle there. So that was a great little move. So, and actually you can see this same sort of thing here when we're watching the pivot points right around 70. This candle broke that. That's actually the R2 line. So pretty high, pretty bullish when you get that high. It stayed above it the entire time. We just basically had this broad consolidation area that it stayed inside of right here. And as it consolidated there, it eventually did keep moving up. So that's where you said you left some money on the table. But I mean, that took a good little while there to consolidate that way. And so you can't predict that stuff, and you got theta moving against you too. So you always got to think about the theta. So I missed that. What was not often really on CSX? Can't watch the chat at the same time because of the windows. Oh, you don't watch it often. Yeah, and really, you know, a lot of times, some of these stocks, I'm watching a lot more stuff now because of earnings, stuff that I would never normally watch. You can keep a repertoire, a watch list of certain stocks that you like, and because sometimes they'll just be dead, and sometimes they'll have some action going on, and depending on what's going on, you may start watching them again. But when they turn dead, you move them out of rotation and start watching the other ones if you like to do that. SPY has enough activity that you can play it every single day. It's got something going on for the most part. Some stocks kind of have that going on too, but they're a little crazier, like Netflix and Tesla. I don't like those stocks. Kind of scare me a little bit because they get pretty crazy, and you've got people like, especially Tesla, that will, just because Elon tweets something, they go crazy and they buy the stock. Makes no sense. But that's what you get with those sort of stocks. There's always something to do. To me, it's better to find something like CSX is very liquid with options. Apple, Microsoft, McDonald's, even Walmart, those stocks. I don't think they're super interesting all the time, but there's usually something there to trade on a pretty regular basis. And so, yeah, this is a pretty good play on CSX. Had a pretty easy to spot pattern, and it had the added benefit of just coming off of some earnings that were actually good earnings, and then it sold off, so it makes total sense that it's going to bounce. Another good indication that it's going to bounce is this right here, the day before. The day before, it stayed in this price action right here. So what happened the next day is it finally broke out of that. That's a big indicator. Let's see how that looks on the 5-minute chart, since that's what you were watching. Yeah, so you can see on the 5-minute chart, it broke out of that with that first 5-minute candle. So that's a great indication that once it broke out of that consolidation area to the top, then it was going to keep going up. So nice trade. Yep, exactly. All right. So let's see what else we had here. We had Jim on which stock was that, Jim? Which stock was that? Microsoft. Microsoft is very crazy right now. Pre-earnings, that is. It's this today freaked me out. I mean, that's a huge drop on Microsoft in one day. So, but we've got a lot of selling off. Look at this. Sell off, sell off, sell off, sell off today. So let's see. That was last Thursday. So that was here. Okay. And did a quick scout based on, okay, so let's see, what time frames was he? The 1 minute, I think. 11:35 bounce. So he was looking at the indicators that Joe taught us. So this is really good. Now, and I've got those on my chart here. MACD, fast MACD, money flow index, momentum. Let's look at this on the 1 minute chart. I gotta give myself time. Or last Thursday. Here we go. Okay, so I had a sell off. Now it actually opened above the pivot point, resisted at the R1 line, broke the pivot point, and it's a pretty decisive break whenever it happens like that. Right here, big red candle through the pivot point, tested it, broke it again, tested it right there, resisted. Okay, so I know you didn't go short on that, Jim, but that would have been a short indicator. Breaking the pivot point was tested. Even though the money flows all the way to the floor, we're in a downtrend. And so a lot of times when it's in a pretty good strong sell-off, it'll stay below. We'll get these little green candles. But it's staying below. And if you're staying below the 5 MA on the 1 minute chart, that's a pretty strong sell-off. That's what it did. Tried to bounce a little bit there. No cigar. Came back down. Now, then it just sort of started going sideways. And in this sideways action, you see a little bit more defined up and down movement based on the money flow index. So you can see here, and it's at a support line. It bounced and then got up to the top up here. Money flow went high. Wasn't a big move, so it sold right back down. Flow went low. It came up. Resistance line, sold back down. Money flow started building. So this is something interesting to watch. But when it came down here, now that would have scared me a little bit, Jim, to enter there, just because it was already in such a pretty strong downward movement. But it eventually did recapture. So here's, but you said it was a quick scalp. So you can't actually scalp. You can see here. You're just scalping. Wrong drawing tool. You're just scalping from where it bottoms here. You wouldn't scalp that because the MACD was pointing down and didn't cross. You would scalp it from here. Money flow is pointing up. MACD crossed back up and it's pointing up. So you could play that right there, or a good 33-cent move. Would be a quick little scalp, probably 10%, 15% maybe, until money flow got overbought, and then you could scalp it. Now I would scalp it on the downside. Wait for that money flow to get overbought, scalp it here, and then wait for it, because we're in a downtrend, and then wait for it to get low here, and then close it out. And that would have been a 60-cent move. Because we're in a downtrend, the move would have been a little more. But if you buy it over here, which is what Jim said he did, you got a little quick scalp for 25 cents. Okay. What's interesting to me is, just because you brought this one up, I haven't talked about divergence a lot. It doesn't always show up. But what we see right here on the money flow is the money flow is moving up while price is moving down. So when you get divergence like that, this means price movement is about to change. Okay. So even though we are overbought here, you can see, and I can draw this a little bit better. You can see that we've got a trend going that breaks. And so in that short-term trend break, we could buy in if you can spot that divergence. So as this goes up and down, it kind of oscillates up and down, it gets higher. People are buying the stock. This means, you're not just looking on money flow. You're not just looking at, is it overbought or oversold? You're looking at, are people buying the stock? So even though the price is going down, money flow starts to stabilize. It stays between the 20 and the 80. And it actually gradually starts moving up. That's a good indicator. That means people are buying this thing. So then whenever it breaks either a trend line break, that would be an indicator to buy, go long. That's a trend change. Or what a lot of times I'll look for is whenever this gets overbought here and comes back down and doesn't go all the way back down, or even if it does go all the way back down, it sort of starts to bottom out. And see, then when it finally goes all the way back down, you can see that we got a lower low, pretty deep sell off there, but the price didn't sell all the way back down, right? So what we saw here is price went from, or MFI went from overbought to oversold, and we got a huge down move like this. Price went from overbought to oversold pretty much, and the price really didn't move that much. That's a clear indicator that direction is changing, on top of the fact that we had this trend break, on top of the fact that we had MFI and price divergence there. So that would be an entry for me Once it reached the bottom and started moving back up, we had MFI moving back up too, or I'm sorry, momentum moving back up, and we had MACD moving back up. That would have been a heck of an entry right there. And that would have been a 25-cent move. And if you really wanted to keep scalping it here again, you can clearly see that the trend has changed by this point. It's following support along the S1 line there, and it was oversold. So that would be another indicator. That would have been a nice 50-cent scalp there. So scalping with the money flow is really fun. You got to be in and out pretty quick. But and Microsoft is one of those stocks that follows the money flow really well. It's got decent money buying it every single day. The how it reacts to the money flow, how it reacts to the pivot points and traditional support and resistance is pretty predictable. I mean, if we just go back a day, just because I want to show this on the money flow, on the day prior, is that the day prior? That's the same day. Back here. Okay, on the day prior, money flow was all the way at the bottom at the open, and it kept selling off at the open, but then it got supported at the pivot point. Okay, we saw a break, reclaim, break, reclaim, break. Oh, it held it, so it kept holding it. And while it's holding it, price is not moving down, it's moving up, and the MFI goes from being bottomed out to moving up. And so that's and again, that's that kind of divergence here where you've got MFI moving up here, you got price moving down here. That's your divergence. So that's an indicator that you might want to get in if it holds this support, and it did. So that would have been a nice 88-cent move there based on divergence. Even if you got out over here where it said oversold, that would have been a 60-cent move. So that's not a bad move. On the MFI, watching the momentum, MACD along with it, and looking for some divergence. So I know that's not exactly what you were looking at, Jim, but that is one of the things that would have given me some indication as well on that. So good trade. All right, let's look. Now, Sarah, and Sarah is trading some indicators that I am not completely familiar with. I will say this, she's trading Roku. I'm actually getting more and more curious about Roku because it does a lot of really big moves. And Heather as well plays Roku, and you can make some money on this scalping it, and it looks to me like it follows the indicators fairly well. If we look at yesterday, let's just do this. If we look at yesterday, it opened below the pivot point, tried to reclaim it, couldn't. Try to reclaim it, it finally did. It got oversold, but then the price only went to there by the time it was overbought. So that's a good indicator once it said overbought. Obviously at this point, we're over the pivot point. Price did not move down that much between oversold and overbought, or overbought and oversold. Price did not move down that much. And so this would have been an entry for me, probably even over here watching it. But then it went down a little bit more. And that's where some of these stocks kind of scare me. Netflix does the same kind of thing. Facebook actually does the same kind of thing. But I've gotten to know Facebook enough to know when it's a fake out and when it's not. But this little move here from oversold to overbought, that's $2.88 move, 2% move. That's a big move to just scalp. Okay, and even if you did it over here, between here and here, that's a $90. It's a dollar move, 90 cent to a dollar move on that. So Roku's kind of interesting. The thing you got to do though is you got to be patient. You could have played the put entry. I try not to go against the trend, but you could have played a put entry there, scalping based on the money flow, and that would have been a pretty decent move there. Another $2.88 move. Higher low, once it bounces, that's pretty good. But this in the morning, all these stocks like this. Netflix was the same way today. You have these violent moves in the morning, and you can make a lot of money on that momentum, but it scares me a little bit sometimes. If you get to know a stock, though, really well, then it's going to make you some money. Some of the indicators that Sarah uses for that, though, I am not completely familiar with, so I would love to even bring Sarah on at some point and have her. Are you on, Sarah? You guys can unmute yourselves too if you want to say something. Made good money on Roku and lost a lot too. Yeah. I've been watching Netflix for kind of the same reason, because it interests me with the big moves that it makes, but it kind of scares me a little bit too. I would even love to have you on one time, Sarah, to just kind of tell us about these indicators that you're using, and just maybe we can see some ways to implement it. I keep it pretty simple myself. I use money flow. This is the most indicators I'll ever have on my chart. Usually when I'm trading just, and I have Chipotle up, when I'm trading just SPY, I've got RSI on the hourly, and I've got the money flow on the 1 minute chart. And you can see I actually use that mostly for ES, because we can get the chart right here. Let's start it over. Okay. ES follows the money flow oversold and overbought indicators a lot better than SPY does. But those are the only indicators I usually use. But when I'm watching Microsoft or Facebook, I do use them, because they really behave pretty predictably with the indicators. Yesterday was a weird day for Facebook. Some days they don't they don't really touch the indicators that much. So it really just depends. We had this big sell-off today. They are being sued, interfering in elections, apparently. All right, so Keith had he had an Amazon yesterday, did an Amazon looking for an exit at or before 1800. So let's look at yesterday and to today, I believe. So got into Amazon today looking for an exit at or before 1800. So it sounds like he was in a call. No, he didn't explain that any further. Okay. Yeah, so I'd like to hear a little bit more about where he got in and what got him in. It looks like he's looking at the hourly charts. Let's go to the hourly chart. Now, one of the things to draw support and resistance that you can use are Fibonacci lines. And I like Fibonacci lines to draw support and resistance. In fact, we should probably take off some of our studies to draw some Fibonacci lines. So Fibonacci lines, the best use of Fibonacci lines is to find future higher. The reason I haven't used them a lot on SPY recently is because we've been in this area before. Support and resistance lines have been pretty well established. Some of that was established prior with Fibonacci lines, but I'm usually looking at future higher moves with Fibonacci lines. But you can also draw the support and resistance that is inside of what you're currently trading. Let's go a little bit further time frame. Because the other thing that you have going on with Amazon right here, as he mentioned, is you have this cup and handle forming right here. And this is actually it's a short-term cup and handle, but this is a picture-perfect cup and handle. That is to say, we've got earnings coming up. So if we didn't have earnings coming up, I would play, just as Keith mentioned, I would play Amazon over 1800. Okay, and the reason is is because you've got, here's the cup with a nice deep base. You want to look for a base with a lot of action, a lot of up and down action. If it just goes straight down and straight up, that's a different pattern. You want to see a what actually looks like a U for a base. Okay, so we got a nice U base there, and then we've got a handle, and the handle always goes, oh, wrong drawing tool. The handle always goes this way, like that. And so that's what we've got here on Amazon. There's the handle. This is the cup. So he was looking at a play basically from the bottom of the handle down here up to 1800, and really, this wouldn't have been known until today, but this looks like the top of that handle. But the handle's going to consolidate a little bit and be below that 1800 line. So it's not going to break 1800 until it actually breaks out. You need a little bit of consolidation to the side to build up that momentum to go further up. And so this right here would have been a pretty decent play. And if you got out today, this morning, you would have got out this morning because it dropped like crazy afterwards, but it touched 1790 kind of there. So that's a pretty decent move. Amazon is another great stock. I don't play it a lot. I watch it because SPY reacts to it. But I would love to see some people playing Amazon. It's a very playable stock. It follows patterns very well. I don't know if it follows the MFI very well. I have not really watched it for that. Yeah, it looks like maybe it sort of does or doesn't. I haven't watched it that much to really know, but it's a great playable stock, and a ton of people play it, and it's not as violent like Netflix or Roku or Tesla. Okay, so those were some great picks, guys. We had a couple more in there that I didn't get time to go over, but we're right at an hour right now, and so I really appreciate you guys posting this stuff. It looks like, just to give a kind of a recap here, it looks like the topics that are being used to find these entries on these things are support and resistance, finding support and resistance. So number one, if you're not sure how to find support and resistance clearly on a stock, just ask. If you want me or anybody else in the chat to give you some support and resistance for a stock, just ask. As you can see by these plays, there's some people in the chat really know what they're talking about, really know what they're doing, and can really help with finding support and resistance if you're not sure. The other thing is using just a couple little indicators in these trades. You know, like with CSX, DG didn't use 12 different indicators to find an entry. He was looking at just a couple things, and that's a big thing that a lot of people, when they're trying to get comfortable, aren't sure. They think they need like 12 different indicators, and you don't. You really don't. You need to get focused, get laser focused, find what works for. Just like I said on SPY, I know what works on SPY. Okay, I know what it's going to react to. The things that I look at are pivot points. I've got my support and resistance drawn. Okay, I do follow money flow just a little bit. It's not my overriding decision. And I look at candle patterns. Today, it was eluding us most of the day, but we had a dead cross on the hourly. 20 MA was holding its support. It finally broke. That was a clear indication that that dead cross was finally winning. And it was for other reasons besides technical ones, but price action, it's telling you what the market already knows a lot of times. The reason a dead cross forms is because people are already telling the market that, hey, we're getting out, price is going down. And so you're able to use those patterns to predict movement because it's a pattern, because it's happened before, and because those things will tell you something that's going to happen again. It's not anything that the market doesn't already know. It's just that's how you read the market. That's how you understand what the market is telling you. And you don't need 12 indicators to do it. Most important thing you need is support and resistance. Support and resistance is based on price action. And then if anything else complements that, great. If it's contradictory, don't use it. If I've got a dead cross forming and the money flow tells me that it is oversold and it should be going up, I don't care. I'm watching the price action. Price action is telling me that I've got a dead cross coming. That wins every single time. Now, if I've got a dead cross forming and money flow tells me that it's oversold, that tells me, hey, it's complementing what I'm already seeing going on in price action. That's just another point added to that price action of the dead cross. Hey, that's even more reason to get in, but it doesn't override price action. Nothing, no indicators, no study overrides price action. It's all about price action and volume. And the money flow is gauging. The reason I like money flow so much is it's RSI, the same thing. It's gauging and telling us what we can't see clearly, is telling us what's going on with the price action in a different light. So that was some great plays. If anybody has any questions, hit me up. Otherwise, I am going to see you guys next time.